All right, now to our next conversation. According to the 2021 Global Retail Development Index, Nigeria's total sales have been trending south, falling to $105 billion in 2019 from $109 billion in 2017. But in 2021, we've seen a rise to about $108 billion. Well, for analysis now, we have Ruke Awari-Tafe, CFO and co-founder, Trade Depot, join us on the program. Great to have you. Good morning.
Hi, good morning. How are you doing?
Great, fine, thank you. Well, but after 7 years of retail sales, trending down, we've seen an improvement in 2021. What do you think contributed to that uptick?
I mean, I think you would have actually seen a much greater improvement if not for supply chain constraints brought about by COVID. I think what we are seeing today at the retail level is even an inability for most parties to meet the demand with the growing population, right? That is happening especially around the informal sectors. So there's a significant growth in demand, but that demand is really focused on essentials as opposed to any form of ostentatious goods, so to speak.
Right, but can you give us a quick overview of Nigeria's retail sector?
Okay, so I mean, when you look at the retail value chain today and the retail sector in Nigeria, you have majority of the Nigeria's retail sector, I would say close to 95% of that retail sector, right, is informal. 5% is your modern trade and your formalized hypermarts and that kind of retail establishment. So majority of trade is still happening through those informal retailers. And today, manufacturers have to figure out how to get goods across these informal retailers because you have over 1 million retail stores across Nigeria alone. When you want to figure out distribution for your products, you need to basically figure out how to get your products on the shelves of these informal retailers. So the retail value chain is really highly fragmented, and it is predominated by the informal trader, of which probably about 83 to 85% of them are actually women that are driving and powering this particular sector.
Quite interesting, talking about the challenges, but what role can technology play in addressing, some of these challenges?
I mean, so when you look at these parties in the sector, of course, focusing here on informal retail, the predominant challenges that they seem to have is first access to reliable supply at competitive prices. Your typical retailer has to go to multiple markets or close their shops for a day, half a day, just to be able to restock their shops, right? That is really a supply chain problem. And we believe that connecting and digitizing that retailer and connecting them directly to sources of supply enables them to build their businesses faster, but really transforms that sector. And that's where really technology comes to play a key role. Now, once you have done that, that digitization, it means that you are on the path to creating some form of economic identity, right, for these retailers, because once you digitize them, you are able to capture their transactions, and that gives a sense of what their business size is. That allows you to start to build that profile for them that enables you to eventually credit score them and then give them access to products on credit, which then allows them to grow their business, because that is another major constraint that they have, where your typical informal retailer has no economic identity and because of that has no access to credit, or even when they want to get access to credit, it is so highly priced because they are flagged as a very high risk. Whereas looking at those businesses, these are very thriving businesses, right, that are the bedrocks of various neighborhoods and are the means by which those neighborhoods get their supplies.
Right, and talking about credit, a couple of companies offer, buy now, pay later as services for retailer. How's that going?
So, I mean, we have found that really very interesting. It is something that We ran pilots initially last year, and Q4 last year, we raised some funding to be able to significantly scale that out. What we have seen is a very significant impact on their businesses. You would find retailers being able to extend the products, the range of products that they are carrying, right? And that has resulted in probably 2 to 3 times increase in turnover in certain categories for them, right? Which is very, very significant when you look at the kind of businesses that they are running, that these businesses are entirely based on turnover. So we see that as a very, very key trigger for growth in the informal retail sector, and which is why today we provide those buy now, pay later services, right, for not just only goods purchased directly through our commerce platform, but also in partnership with other authorized pay partners, right, so that the retailer is really able to fully benefit from those kind of facilities that would enable their businesses scale rapidly.
All right, looking at this model now, what kind of risks are associated with the buy now, pay later model?
Well, so I think one of the key things that you find and that one has to mitigate is how do you build that economic identity, right, for that party? Because lending to somebody that, right, or providing credit to somebody that you really have no track record for is really a very high risk activity, right? So being able to mitigate that by leveraging multiple data points, right, which today we are able to leverage through the person's transaction history that enables us to see how much they have been buying, what is their buying behavior, when goods are brought to that person, does the person have cash to be able to pay for those goods, right? And that enables you to, over a period of time, build that profile that allows you to mitigate the risk of not knowing, right, what this business is capable of. You are then able to determine how much credit, what the credit limits should be, right, for what duration can you extend credit for this person, what should the collection routines be, right, for such a retailer. And that basically allows you to mitigate that risk, right? But which, if you are not able to do that, then really you are really exposed to very significant risk because of lack of information and data.
Quite risky, and so you don't have to start naming and shaming people. But how's the market, responded
Absolutely.
to BNPL services? Are retailers coming on board?
Yes, I mean, so we see very, very significant uptick today, and we see.
Right, he was talking about the BNPL service, and was trying to tell us, if people actually are coming on board, because retailers are using some of these models to actually find a way to get more sales, of their products with the buy now, pay later model. He was trying to explain to us there, the risk and, how people are actually responding to this new model. We'll try and get Mr. Oruke back. If we can't get him back, I was also going to talk about, how geopolitical tension is affecting, rising cost of living, and how retailers should actually manage the situation right now, with so much as we have supply disruptions and all of that going on. We'll try to get Mr. Ruke back. I don't know if we have Mr. Ruke. Are you there now? Okay, I guess we don't have Mr. Ruke at this time. We'll try again to get him again. All right, so let's take a look at, what's happening. All right, Mr. Ruke, do we have you back now?
Yes, you do. Apologies.
Yeah, I know the network can do that, sometimes. But you can finish your thoughts. We're talking about if retailers were coming on board, on the BNPL model.
Yeah, I mean, so I was giving the story about the lady in the neighborhood who was buying flour and basically was able to increase her turnover, right, significantly, right, by 1.2 million. And we see those kind of trends evolving where people are then able to leverage these credit facilities to significantly grow their business. So the uptake is pretty fast. And I think the real to-do is being able to make sure that you gather that data so that you can build those economic identities for these parties and then support their businesses to grow rapidly.
Quite interesting, building economic identity. Well, but, you know, we have rising inflation right now, geopolitical tension, rising cost of living. You know, what should retailers and manufacturers in Nigeria be doing right now?
Well, I mean, building efficiencies are crucial, right? When you have these kind of challenges, because margins tend to become slimmer, right, for all parties, and you don't have room to have basically any wastes in your supply chain, right, processes or in any of your operational processes. So trying to really leverage technology, right, both for the manufacturers to be more efficient around how they do their distribution, for the retailers to be more efficient around how they do their sourcing, right, this would be crucial in the kind of economic climate we have today.
And also with, you know, dwindling consumer demand at this point, how do they handle that? Does BNPL play into that?
Yes, so when you look at the dwindling consumer demand is really not, it is a contraction around the range of products that are being demanded for the core staples, right, which are your core FMCGs, your everyday food, right, items. Demand is not actually going down for that core, the core base of those items. So the retailers leveraging BNPL to be able to stock more of these kind of products, right, which are your staples, your Semovita, right, your various items, your beverages and the likes, right? That is very crucial for those retailers to be able to ride out this period. The typical high value items that they would have stocked that gave them higher margins, right? Demand for those items would have dropped, right? So they need to be able to cycle faster and increase their turnovers to basically retain the revenues that they have been making as a business.
Right, quite interesting, you know, but the beginning of 2022 has been quite, you know, tough. You know, we've seen a lot of things happen, you know, from tensions to, you know, rising costs of living. But looking at, you know, 2022, what's your outlook, you know, going forward?
I mean, so
and that's
we
for the retail
see
industry.
very positive. Yeah, absolutely. We see very positive trends in that retail industry, right? I think the key thing to always rationalize is that there's some direct correlation between the growth of your population and, right, how well retail does, right? So as your population also starts to grow, we do see that trend where retail would need to be able to serve that growing population. Otherwise, how else would that population be fed, right? So we see an outlook in 2022 where there would be significant growth across that sector. It would be more geared towards a fair balance between indigenous production, right, where you have local manufacturers, right, being able to meet the demand gaps that currently exist. And that would really bring about significant growth, because quite a number of these parties have been investing, right, in 2021 to be able to meet the growth in demand that is projected for 2022.
And what kind of policies would you like to see, you know, from the government to actually, you know, boost this industry?
I mean, so you find that the sector, because it is very, very, very informal, right? Any policy that is rolled out by government, right, to support the SMEs, right, of which there have already been quite a number, right, that you have seen over the past 24 months. But that continuous drive to continue the growth and support of SMEs, since 95% of commerce is happening through that sector, right? Those kind of policies would always be very favorable, right, to the retail sector, would lead to significant growth.
All right, we'll keep watching that industry in 2022. Thank you so much, Mr. Ruke Aoritefe, co-founder and CFO Trade at Depot. Thank you so much for coming on the program today.